This is Sam Schaefer with the Legislative Fiscal Division, and this analysis is for the Financial Modernization and Risk Assessment Study, and it is really a continuation of a report that was done last summer that was sort of analyzing the differences in income levels as well as tax liabilities across counties in the state and across certain age groups, particularly those under the age of 65 and over the age of 65. So once again, the background for this particular report was a study that was done in the summer of 2020, and it looked specifically at resident income and tax liability by age. Early analysis really focused on some of the potential future impacts to individual income tax collections of what we learned was an aging population in the state of Montana. And this was really put at the forefront during Legislative Week of January of 2020, when the Legislative Fiscal Division did look at those changing demographic trends across the state, and specifically, across county lines within the state. The idea was, or the thought process was that as individuals aged, perhaps their retirement income may or may not have been lower than their working year income. And if there was not a worker available to fill that specific role or that specific job opening, then you would just have one individual with retirement income that maybe had a lower tax liability than their working years, and that job that they once held would not be filled with a worker, and so that position would not generate revenue for the state. Over the past few years, and especially over the past year, it seems that this might not be an issue because certainly anecdotal evidence has suggested that even before the summer of 2020, individuals were moving to the state, and a lot of these individuals were indeed working age individuals. So this current stage of this particular study is really going to look at the income trends of those people moving here, as well as non-residents who do have some tax liability within the state. So when we look at non-resident income, well, first of all, non-resident individual income taxes, there is a liability that's due if a non-resident of the state generates income within the state. And while it's only 5% of total income tax collections within the state of Montana, that is still real money, and it averages about $70 million per year. And one thing that you can notice right off these two charts is that the portfolio, that is that income portfolio of non-residents who do owe tax within the state, is quite different than Montana residents. As you can see on the left-hand side of the chart, that is the income portfolio of non-residents. And this isn't necessarily the income they earned in the state, but this is that income which is reported on their federal income tax form. You can see half of it is in the form of capital gains. About 20% of it is then, rents and partnerships. And thirdly is where you see the wage income, which is 18% of their income portfolio. On contrary, Montana residents' income is dominated by wages. And this is across all age groups. And you can see almost 2/3 of total income is in the form of wage income, followed then by retirement income and then rents and partnership. So, well, that shows the portfolio of the income. The next question is, well, what do the income amounts look like? And as you can see in this chart, non-residents have significantly higher incomes than Montana residents. What this is the median non-resident FAGI, which is federal adjusted gross income that everyone reports when they file their taxes. So this is really an apples to apples comparison on income. This isn't necessarily, not even necessarily, this is not Montana source income, but this is income reported on the federal form. Non-residents, like I said, have higher income levels than those Montana residents. And to put it in perspective, it's about twice as large over the past decade as the median Montana resident FAGI. And for exact amounts in calendar year 2019, which is the most recent available data, the non-residents had a median FAGI of 91,000 compared to 47,000 for Montana residents. And when we're looking at this data, the source of this data is indeed the tax returns that are filed within the state of Montana. The Department of Revenue sends this data to the Legislative Fiscal Division. It is confidential data, but it is, when it is shown in this form, can be used for analysis that can then be distributed to the legislative branch, legislators, and the public. Now, as opposed to just looking at the median income levels, which, if we remember, is sort of that middle value. Okay, so if you had 5 values, the median would be the third value. The discrepancy is much, much, much larger when you look at the average FAGI for non-residents compared to the average FAGI for Montana residents. And the reason it is so much bigger is because when you're looking at a median calculation, values at the top, really, really big values, don't have as much influence versus when you compare or calculate an average, those really, really big values at the top have the ability to pull that average up. In calendar year 2019, the average non-resident FAGI was $1.1 million compared to $75,000 for Montana residents. And this is, as I said, purely a product of just how big some of those income levels are for those top earners. The top 10% of non-residents have an average FAGI of 9.6 million compared to 272,000 for the top 10% of Montana residents. So there are individuals who are not residents here and pay tax here, and the story is they have a very diverse portfolio of income dominated by capital gains, and those income levels are extremely high in some instances. And even when you look at just the median value, even, it is about twice as big as Montana residents. So moving on to partial year residents. Well, a partial year resident is an individual who at one point during the tax year was a resident of Montana. So this can be either someone, and let me clarify that, it was someone who was a resident in the state of Montana, but during the course of the year also declared residency elsewhere. So this is really someone who either lived in Montana as a resident and then moved to another state and declared residency, or someone who had declared residency in a different state and then moved to Montana and became a Montana resident. And when you look at the federal adjusted gross income between these two groups, they are much closer. You can see that actually Montana residents had an FAGI of about 11% larger than those partial year residents. And as I was saying, and we'll look at this in a little bit, as we break this down by age or by maybe location, it does vary bit by bit. But when we look at the people moving to Montana as a whole in aggregate, you can see that their residents are actually, their income levels are actually smaller than their resident counterparts, but pretty close in comparison. So the remaining analysis here isn't necessarily going to focus on Montana residents partial year residents who lived in the state and moved out. We're really interested in looking at income levels and maybe future tax liabilities of those individuals who are new residents to the state. They were residents elsewhere and now have moved to Montana and declare residence here. So incomes were quite similar for those taxpayers under the age of 65, and that is going to be the bar on the left-hand side of each one of these charts. But those who are over the age of 65 and moved to Montana actually had quite a bit higher incomes than the full-year resident counterparts who are over the age of 65. And when we do get the income tax return data, there is a particular variable that is essentially over under 65, and that's the only metric we have to look at age. And the reasons that is there is because Montana does offer an interest income exemption for those over the age of 65. So that's how we know whether or not someone is over or under 65. So on this left-hand chart right here, you can see that Montana residents under 65 had a higher median income than their partial year resident counterparts. We're looking at $42,790 compared to the partial year residents of $37,892. But the trend quickly switches when we look at those partial year residents over the age of 65 compared to full-time Montana residents over the age of 65. We have incomes on those people who moved here and declared residency of 79,636 compared to Montana residents over the age of 65 who earned a median value of 66,756. So this chart here looks at the median FAGI of Montana taxpayers compared to partial year residents for those under 65 and those over 65. But once again, we see a switch when we look at the average levels of federal adjusted gross income. In fact, partial year residents here actually pass Montana residents in both age groups, 70,638 compared to 68,973. And then we see the largest discrepancy of any of these four when we look at partial year residents over 65 earning on average 129,271 compared to Montana residents over the age of 65 with an average FAGI of 101,885. So, there's definitely working age individuals who move to Montana and they have comparable incomes to the residents, but it is certainly likely that when we look at the under 65, these partial year residents, median and average FAGIs are probably pulled downward due to college students who have low incomes and low tax liabilities, but did move to the state and ultimately at some point became Montana residents. So while we don't know, exactly how much of a role that is playing, it is probably playing some immaterial role, or pardon me, some material role in lowering the average and median income levels for those under 65. So what do those portfolios look like of partial year residents? Well, they are a much more diverse income portfolio than residents, especially for those under the age of 65. When we look here, you can see 2/3 of reported income for new residents over 65 is in the form of retirement income, and this is really of no surprise. When we look at Montana residents over the age of 65, they have high retirement income as well. But when we look at those under 65, it is, extremely diverse. You can see wage income here only makes up 36% of the income portfolio. And when we compared that to the income portfolio that we looked at earlier of all Montana residents who had nearly 2/3 of that income in the form of wage income, and that included retirees, you can see that there's quite a different portfolio. After wage income, you then have capital gains making up about 31% of this income portfolio for those under 65, and then rents and partnership rounded out at about 20%. So for those over 65, really no surprise, a lot of retirement income, but for those under 65, quite a surprise, really insofar at how much lower the wage income is for the as opposed to all Montana residents, which even includes retirees, and saw some wage come at nearly, wage income of close to 2/3. So where are individuals moving? When we look at the partial year residents, these are once again individuals who declare residency in one state and then move to Montana and declare residency here. This is really just sort of a map that looks at new tax returns, not necessarily people. That's just one thing to keep in mind, though a new tax return is a proxy for a person or a group of people. But this is new tax forms that were filed throughout the state from partial year residents from calendar year or tax year 2015 to tax year 2019. No surprise when we just look at peer counts that the biggest increases were in the population centers. You can see here we have Yellowstone County, our Gallatin County, Cascade, Lewis and Clark, Flathead, Missoula, Ravalli, and then Butte-Silverbow. And Gallatin, which it might be no surprise to anyone listening to this, has definitely seen the largest increase of really ultimately new residents now compared to other counties. So instead of just looking at pure counts, though, it might be interesting to say, okay, as a percent of population, which counties saw the largest growth? So this analysis looks at new tax forms or new partial year residents in calendar year 19 divided by total tax forms that were filed in calendar year 19. And there's a little bit of a different picture. Really no surprise. We have Gallatin County that is definitely the darkest and saw, one of the largest percent increases, followed by neighboring Park County. And then as opposed to, in the previous slide, seeing sort of areas like Lewis and Clark and Cascade light up, what we're really seeing is significant growth as a percent of really population. Tax forms are, a decent enough proxy or some sort of metric to look at one population of one county compared to another. But it's really focused here on the westernmost counties, especially those sort of bordering the Montana-Idaho border. Excuse me. And the picture changes even more when we look at tax returns from partial year residents, especially those moving here by age. If you look at those tax returns and the percent growth by county under 65, the highest growth rates look like sort of that first map we looked like. They're confined to, Gallatin Park and other western Montana counties, especially along the Montana-Idaho border, including Missoula County and then Flathead County. But the picture changes, fairly dramatically when we look at where individuals are moving, especially those over the age of 65. That's what this one is, over 65 migration and in migration. And once again, we're looking at growth rates. So new tax forms filed as a percent of total tax forms filed in that year. And here we can see that really aside from Flathead County, counties that are rather more rural saw significant growth compared to those under 65 individuals in those more urban counties. Once again, Flathead County saw a decent amount of percent growth, Ravalli County some, but then you can see way up in the northwest corner and sort of south central Montana, there is significant growth as a percent of existing county population for those who are over 65. So, what does this mean going forward? Well, it's going to be quite interesting to look at the calendar year 2020 and then eventually calendar year 2021 data. So as you could see throughout this presentation, especially the last few slides, there was significant migration to certain areas of the state even before the pandemic. But this is a trend that, every metric you look at has certainly been accelerated in the past year and a half. Once that calendar 2020 tax data is available, and it will be in November, this analysis will be able to be extended upon. The same analysis will be able to be performed. We will be able to look at what counties saw growth in 2020, what did the incomes of those residents look like, and in addition to that, we'll be able to look at residents who moved here in calendar year 2019 and look at their incomes, which we looked at in this presentation, and see if their incomes change dramatically once they've been here a full year, as opposed to what their income was when it was split in two states compared to now having a full year's worth of income in Montana. So there is the ability to track those taxpayers through time. There's a specific confidential ID for each tax form that's filed. And so we have the ability to really look at any one taxpayer without knowing who they are and track them from one year to the next and see how incomes changed from one year to the next. Or if, at some point we're looking at migration from one Montana county to another. So much more to see once we have November data, and this will be extended upon, and there will be an ability to do some additional analysis that may be of interest to this group and the legislature. So with that, the presentation has concluded.